Did you know? Many people think the home loan interest deduction is always limited to 2 lakh rupees. But that's not entirely true. If your property is self-occupied, yes, the deduction for home loan interest under Section 24B is generally capped at 2 lakh rupees per financial year, subject to the prescribed conditions. But here's the interesting part. If your property is let out or deemed to be let out, there is no monetary limit on the deduction of eligible home loan interest. In other words, you can claim the entire interest amount paid while computing your income from house property. However, there's one important rule you should know. Even though the interest deduction is unlimited, the loss from house property that can be set off against your other income, such as salary or business income, is restricted to 2 lakh rupees in a financial year. So what happens to the remaining loss? Don't worry. The unabsorbed loss can be carried forward for the next 8 assessment years and adjusted against future income from house property. One more important point. Under the old tax regime, you can claim the interest deduction for both self-occupied and let-out properties, subject to the applicable provisions. Under the new tax regime, the deduction for interest on a self-occupied house property is generally not available. However, the deduction for interest on a let-out property continues while computing income from house property.
If you have property on loan and paying huge amount of interest on loan, let out the property even at nominal rent or minimal rent, claim the interest deducted unlimited amount, set off against any other income source, and also carry forward the loss from house property for next 8-year adjustment. Remember, the property should be genuinely let out and the rental arrangement should be bona fide as per the provisions of the Income Tax Act.